Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the tech sector here, bulls on fire. We have our 10th green day in a row and a big dip on the back of some Russia news, which pretty much is a good opportunity for buying the dip for the market for the past few months. And so that's what happened. The bulls bought the dip with a long lower wick. We have support down the low of the past 2 days, 57.17, 57.21. So breaking that level, and we'll look to fill the gap at least at 57.13 and see a little bit of further pullback. Our higher low on this uptrend is 56.62, that little consolidation earlier in the week. But the bulls are in full control still. There is no sign of slowdown as we keep hitting all-time highs, and we keep bouncing off exponential support and heading to higher highs. So at this point, we have to see a break of 57.17 to even be considering anything bearish. We did see some of the big names today, Amazon, Apple, Facebook. Some of those names were in the red today, while the sector itself was still in the green. So that's a little bit notable, keeping an eye on that, but nothing significant as it's all healthy, normal consolidation at this point. Weekly time frame extremely bullish. Higher highs are now hit, on the verge of a bullish MACD cross. No slowdown in sight, not fighting this trend. In this scenario, there are two ways to play this. You're either sitting on your hands and not playing bearish or bullish because you don't like the fact that we're overextended on a lot of these names, or you're playing bullish. There is no bearish play right now because we're not seeing any kind of traction to the downside, and anybody that is short is losing. Apple on the daily time frame, new higher high, but the bears took over a bit and we closed near the low of the day. So this is a bearish reversal candlestick. It's our first red day in a significant amount of time. So this is a divergence from the sector overall. And if we see a break of 150.19, we're going to look to pull back, and our first target will be the 50-day moving average support. That's going to be down in the low 149s. So a red day confirming this bearish reversal candlestick is essential. And I will be looking at Apple as a lead tech bear out of the big names because, number one, the weaker bounce, a lot less bullish action compared to other names. And number two, we're seeing weakness without the tech sector as a whole seeing weakness. So if the tech sector as a whole starts to see some downside, we'll look for Apple to magnify that again as well. Weekly time frame still fine for the bulls. If we see another red day tomorrow, we might see a bearish candlestick with a big upper wick of profit taking. Depends on how the day goes tomorrow. Something to keep an eye out on. Facebook on the daily time frame. Upper wick of profit taking yesterday. Looked like we were going to confirm this bearish reversal candlestick when we were at the lows. Bulls bought the dip just like they did the whole sector. So we closed up near the high. This is the highest close we've ever seen on Facebook. So just when you think we have a bearish reversal candlestick and we're looking to confirm it, the bulls buy the dip in a very significant way. Resistance at this point looking up at 165 and 165.70. And on any consolidation, the low of today is our new higher low of 162.81 compared to our recent higher low of 158.81. Weekly time frame breaking out above the upper Bollinger Band. Bulls in full control and looking to close above that upper Bollinger Band to be a very strong end of the week heading into next week. So moral of the story, bulls are in full control. If we see weakness in the tech sector, Apple is a name to look at to the downside. And other than that, very, very strong in the tech sector still. But 10 green days in a row, we know some consolidation is coming. We just don't want to try and guess where it's going to be. We want to wait till we get some signals. We want some losses of the hourly 20-period support. We want to see some breaks of the higher low pattern on the daily. We want to see some confirmation of bearish reversal candlesticks. So that's what we've got, and we'll see you over the weekend.